Hey, what's up, everybody? Jason Wheeler here with FastPacedLoans.com. I am coming at you. It is the beginning of June here, and I'm coming at you with my quick update on the markets. What I like to do is just kind of go through interest rate trends, look at real estate trends in the area, and what I've found is that most of my subscribers and clients, if you're following me or if you're watching this on YouTube, you guys are really getting a lot of value out of this. So I'm trying to do this more often, once a week or so is what I'm trying to do this. So here's my take on interest rates and what they're doing currently. This is the 10-year note. If you're not sure about how to read these charts, then you might want to look at one of my previous tutorials where I do show you how to read these charts and how you could actually look up these charts on Yahoo yourself and just kind of learn how to read what the markets are doing. It's impossible to tell exactly what it's going to do, but it's really easy to find out. Once you know what you're looking for, it's really easy to kind of see what direction or make educated guesses on what might be happening. Well, one of my last videos was made back when we were in a major rising rate market here. And as you can see here, we topped out. What I told people about a month ago is that I believe that we're going to top out around this mark right here, which was a previous high from, I believe this is a 12-month chart. So let's look at a 1 year. So this was about 6 months ago. I predicted that they were going to top out right around here. Now I was about right. If you see there, they popped up, they came over here, and now they've been really volatile the last couple of weeks. Let's go back here to a 3-month. Let's just look at 3 months. 3 months. There we go. Okay, so 3-month chart. Here's the last 3 months. As you can see, since I predicted that they topped out, we've been kind of pretty volatile here, and it's been very up and down, but we've been able to stomach it. It hasn't been too volatile. As you can see, if I make a mark right here, you can see that the rates have kind of been dipping around between this channel that I just built. Now back in the last just couple of days, we've seen rates spike pretty significantly here in the last 2 days, right? So what can we expect for the next weeks to come? Well, we got some reports coming out with jobs and with employment, and if those employment numbers come out in a positive light, we're probably going to see interest rates continue upward. If they come out disappointing, then we'll probably see interest rates come back down, probably closer to these levels. Not too. I don't think that they're going to come back down to these levels anytime soon, but we might see them pull back here in the next couple of days. So if you're in a position where you're looking to lock, or maybe you're purchasing, you might want to wait the next couple of days and see what might happen. If you can't stomach seeing another rise, and it's impossible to say that these could continue to go upwards next couple of days. But we do have some reports coming out. The jobs report, the employment numbers are coming out for May, and those could have a significant impact on whether rates are going to hold steady, go up, or go down. My prediction is that they're going to stay between this channel level right here. That's my prediction. Okay, so we'll see how that pans out. I'm not always right, but my last couple of predictions have been relatively right on. If you're looking to lock and you need to lock and you can't stomach any more losses, you might want to lock it in here. But personally, I think that we might want to see pricing come down right back down to this level. With that, let's just go ahead and dive in and see what the markets are doing on the real estate side. Okay, so obviously the type of financing that I specialize in is helping people get loans for real estate. So let's take a look and see what's going on with the real estate market, and let's take a look at Pleasant Hill. Okay, so we'll generate this report. We'll look and see what's going on in my local market here in Pleasant Hill, California, and you decide if you're ready to jump into this market, if it's a good time to buy. I can't tell you that it's a good time to buy, a bad time to buy. All I could do is kind of offer you some information, some insight, some ideas. So if you look here, we currently have 52 homes for sale in Pleasant Hill. That is a 40.5% increase in inventory since the last month. These numbers are from April 30th to May 31st. Okay, so this is brand new figures as of today, which is June 2nd, 2015. Now, as you can see, a huge boost in inventory. There's let's see here, a decrease in sales or list price of 0.4%. So let's take a look. What does all this mean? Okay, looks like properties in Pleasant Hill are taking 45 days to sell. So that's kind of a while, if you ask me. It looks like we're bouncing around on a median average sales price around between 550 and 600. But as you can see, in just the past month, we've seen it spike up here to 635 for the average price, which is pretty significant, seeing as how the average days on the market are going down. Okay, So what that means is that people are coming in and they're buying them faster, and the reason why the prices are going out is because more people are outbidding each other and competing with each other. So let's compare this to a neighboring city. Let's look at so this is Pleasant Hill, California, one of the markets that I specialize in. Now let's take a look at this compared to Concord, which is the city right next door. You can see how different these markets are just by looking at some of these numbers. So let's look at Concord here. While this goes ahead and loads here, let's check and see. Now in Concord, the homes for sale, there's a lot more homes for sale, but the inventory is down from last month. And as you can tell, the increase in new listings has gone up. The average asking price has gone up, but the average sales price has also gone up, just like in Pleasant Hill. So if you look, how's that translate to a chart? We're seeing the same thing here. So in Concord, we're seeing the average sale price. It's kind of relatively flat over the last couple of months. You know, I mean, yeah, there's some changes, but you can see they're hanging around 450. And in just the last month, beginning of the summer, we're seeing all the way up to 520, which is very significant. And then look at how quickly they're selling compared to previous months. They're selling now in much faster than they were in previous months. So what does this all mean? It means that we're getting into the hot time here. Summertime is the time that everybody's going to be out shopping for property, competing, and driving the prices up. So what does that mean for you as a buyer? Do you jump into the market in the summertime when everybody else is in the market shopping? I don't know. It just depends on what your goals are. But if interest rates do continue to go upwards, obviously that's going to depress people's ability to buy, and that could suppress prices, but we're not likely to see that real quick. My prediction is that we're going to see a pretty healthy increase throughout the summertime. And now may be a great time to go ahead and jump in and get something before prices even continue upwards even further. And you also want to go ahead and try and lock into those interest rates as low as you possibly can. And with these forecasts here, it looks like, in the short term, whether if it's just the next couple of days, yeah, we're seeing some relatively flat volatility here. So as you can see, this channel's been relatively flat, but still volatile day by day. But as you can see on the 30-year timeline, or I'm sorry, the 30-day average, you can see that this is increasing market that we're in. So with that, let me know if you have any questions. If you want to get in with one of our first-time homebuyer classes, the last class that we did was packed, and we got some really great feedback on that first-time homebuyer class. They're all done online, or we could, who knows, if there's a high enough demand for them, we might set up an event that might be live. But if you want to get in one of those first-time homebuyer classes or learn a little bit more about this stuff, find out if real estate's going to be right for you, if you might ever be able to be a homeowner or purchase property, or maybe upgrade from that property that you bought a couple of years ago, you definitely, I'd advise you to get with me or somebody else that you know, like, and trust, and ask them some questions and see if it's something that you might be able to get that might make sense for you. So with that, I'm going to go ahead and sign off. I appreciate you guys following and watching and staying in touch with me. Please, if you're not already subscribed, there's a link somewhere on this page to go ahead and subscribe, get my next update. I do them weekly, and I hope this helps you. I hope I added a little bit of value to your day and you get some insights as to what direction the markets might be going. With that, thanks a lot, you guys. Jason Wheeler here with FastPacedLoans.com. Make it a great day.